Aloha YouTube. Alright, so this is going to be take 2. I wasn't quite satisfied with the last take. It wasn't until I started talking that I realized like how much information like I wanted to process. So at least now I got my talking points down. I want to do this fresh. I want to express myself. I want to do it live. And I just want to, smoke one with your boy Rootz. You can feel free to write some in the chat. All right. Please press 9 if I'm coming through, if you can hear me clearly. I got so many issues with this live stream and my OBS studio and my headsets and everything. So if you hear me, just press 9 if I'm coming through clearly. I'm definitely going to spit a lot of crypto game in this because I feel this is very important to understand. There's a lot I want to talk about, and this is a career that I'm really thinking about diving deep into. All right. Let me just make sure I'm coming through. If I'm coming through, okay, I'm coming through. All right, so DeFi. Now, I only specifically deal with DeFi, decentralized finance. All right, there's blockchain technology. Okay, some call it DLT, distributed ledger technology. That's the corporate attitude. Then you have cryptocurrency, which to me, nothing is crypto unless it's purely decentralized. So that leaves a lot of bullshit centralized coins out the way. Now, I particularly only deal with DeFi. Press 9 if I'm coming through clearly. All right. So I only deal and invest and teach about decentralized finance on Ethereum, the Ethereum blockchain. Okay. I'm rolling a joint right now. I got a lot of game I want to spit. That's why I wanted to do take 2. So if you hear me, just make sure I'm coming through clearly. Press 9 in the chat because these live streams are a little difficult to try to figure out. Okay. Now, Alpha Amora got hacked. They are a new cryptocurrency project that facilitates leverage yield farming, leverage liquidity pools, and also you're able to lend out your assets as well. It's a beast protocol. They just got hacked. Okay, 37 point something million. Now, so when a lot of new people are starting to hear about cryptocurrency, all they're hearing is about hacks, all they're hearing is about scams, all they're hearing about is illegal shit. And it only keeps them away from like investing and learning and diving deep into decentralized finance. All right, I'm gonna need some feedback in the chat. Let me know if I'm coming through. All right, and I don't blame them. You know, if you are aware that you don't know much about computers and technology, you just think that if you throw money at cryptocurrency, it's going to get stolen from you somehow. And in a lot of cases, you are right, especially if you don't know what you're doing. Okay. But this is the game of decentralized finance. So just to make it clear, as long as you own the private keys, and you hold your cryptocurrency is in the wallet that you own the private keys to, you will not get hacked. That is like mathematically proven, right? These are the laws of mathematics that govern cryptography and encryption that save our money and save our identity, okay? Excuse me. Sorry about that. All right. So keeping your money in your crypto wallet is not going to, okay, thank you. I appreciate it, Born Majesty. I appreciate it. Thank you. Keeping your money in your crypto wallet is not going to get you hacked, okay? Unless somebody else steals the private keys or phishes it, or you give away your private keys, you're not going to get hacked. So, but you're not making any more money if your currencies are just sitting in your wallet, because the market determines if they go up or go down, okay? There's a lot of information. That's why I had to do take 2. I want to do this fresh. I have a lot of talking points. And I don't know how long this is going to be, but I feel it's very important information for new people joining in the crypto game and for the experienced people, okay? So let me get back to my talking points. Okay, so how to stay safe. So let's focus on when you invest in decentralized finance, what you're actually doing is taking the money out of your wallet that you own the private keys to. You're putting it into a smart contract. What is a smart contract? A smart contract is simply a software application, a software program that runs on the Ethereum virtual machine. If all this sounds crazy, You got to hit me up for the mentorship. I'm going to be dropping some courses. There's a lot of information. I don't know what else to tell you. But it's just simply a software application. Now, it can hold money. Smart contracts hold money. All right? Now computers can own money. So a smart contract acts as the middleman. It's a software program that is able to accept and hold money. So that's basically what all Ethereum is. It's just a bunch of decentralized applications that run on smart contracts. So when you invest in DeFi, such as lend out your assets on Compound, lend them out on Cream or Uniswap, what you're actually doing is taking the money out of your wallet and putting it into a smart contract. Now the smart contract is going to issue tokens that represent your liquidity in the pool, the vault, the set. There's so many different ways of referring to it, but it's going to let you know, it's going to give you an IOU, essentially. It's going to give you an IOU, a smart contract. And that IOU is interest bearing, okay? That is an interest bearing IOU. It's called a token. So C-DAI would be your DAI that you deposited on Compound. It'd be C-DAI. And that represents the DAI you put in plus the interest that it makes, okay? So if you want to get more out of your money, you need to take on a bit more risk. And that's when we come to invest in a decentralized finance, okay? So now, this is the risk we're taking. Everybody takes these risks. Now, there's ways to mitigate these risks, and we're going to go over it. But essentially, the way you stay safe, one of the ways you stay safe is really just not to invest in decentralized finance. And I would not recommend that. But you got to understand the risk to reward ratio, okay? Now, to me, the reward is worth the risk, okay? Because I can manage my risks. I know how I have different risk profiles. We can get into crypto insurance a lot. So that's what's actually happening. So what happens with these hacks is that the smart contract itself can get hacked, that you put your money into, right? So everybody else puts their money in. These smart contracts hold anywhere from $1 to hundreds of billions of dollars, okay? These things can get hacked. These things can get exploited. Now, that leads me on to my next topic. So how to stay safe, all right? Well, there's many ways to stay safe, and that's one of them is risk management. One of them is not going in too hard. But so a lot of these projects get it. Usually, most of them, the ones that are legitimate, are going to want to get a smart contract audit to prove to their users that you can actually trust our platform. We've been audited, right? Now, what is the smart contract audit? A smart contract audit is software programmers who understand Solidity, who understand Ethereum, who understand computer science, and what they're doing is you're paying, the protocols are paying to get audited. So you have a bunch of hackers that are trying to hack into this protocol for money, and they're going to let the people know this is what's wrong, this is what's wrong. And therefore, your users can stay safe, and your users can feel like they can trust you if you get a smart contract audit. Smart contract audits are very expensive. A lot of projects, especially projects that are bootstrapping, can't afford it. Simply can't afford it because it's very expensive because there's very few people in the world who know how to program smart contracts, right? And there's very few people who can actually know how to hack smart contracts, right? So that's why they're very expensive. And a lot of these projects usually get 2 or 3 audits just to go overboard. That's like getting 2 or 3 doctors' recommendation before they release their protocol to the public, before they deploy it on the mainnet, okay? Now, we used to think smart contract audits were very reliable, very secure, right? You know, you got some of the best, smartest people looking at these and figuring out these exploits. Well, at this point in the game, smart contract audits really don't mean shit anymore. And I hate to say that because I really wish that was the deal. But so many platforms that have gotten audited have all, like, literally damn near have all been hacked, right? There's a crypto Twitter term is like, if you've never been hacked, do you even DeFi, right? Like, do you even DeFi if you haven't even been hacked, right? If your smart contract, that the money you put into your smart contract has been hacked. I mean, it's happened to me with Eminence. So I call it DeFi battle scars. I'll probably do another video on that, right? So I understand this is scary territory. Like, I understand why people are trading cautiously, right? There's a lot of scams out there. There's a lot of things, but and then you got all these hacks that even the most sophisticated, reliable people that put a lot of money into it, they still get hacked, man. Yearn Finance got hacked about a week or two ago. Alpha or More got hacked. Harvest Finance got hacked. Fuck, I mean, so many cryptocurrencies that I've trusted, that I personally trusted, have gotten hacked. Praise Jaw, hopefully Badger DAO doesn't get hacked. But at this point in the game, what you got to understand is that when you have multi-millions of dollars, when you have billions of dollars sitting there in a smart contract, it's like a honeypot, bro. It's like a honeypot. And it's only a matter of time before someone says, fuck it, bro, I'm going for it, right? Someone who really knows what they're doing, right? And most of these jobs, I'll be honest, most of these hacks, low key, are kind of inside jobs, bro. Are kind of inside jobs, right? Because the people who created the code are the ones who know where the code's the weakest, right? And the people who review the code can know when the code's the weakest. So the game is real dirty, bro. The game is real dirty. And it's almost like you can't, I don't know how to say it, but the Alpha or More hack got, more than likely was an inside job, because the information could only have been known by the people who created the these smart contracts. I know it sounds like a lot. Here I go again, trying this again. A lot to go over. Okay, so our smart contract audit really doesn't mean shit anymore. Sorry about that. Sorry about the sounds. Okay. Now my next talking point. There's so much to go over. So the most common hacks are price oracle data feed hacks. Okay, what the fuck does that mean? Price oracle data feed hacks. Smart contract oracle price feed data feed hacks. Okay, so when your protocol relies on data, because it has to rely on data, outside data, right? In order for you to know the price of something on your protocol, you have to receive the data from somewhere. God damn, man. Okay. So what happens is when you rely on one source of data for your price feed, that can easily be manipulated. Okay. So for example, Compound Finance got hacked for like bunch of DAI, millions of dollars worth of DAI. Okay. Now, Compound Finance was only relying on the DAI price from Coinbase, from the Coinbase API. So that's all they were getting their DAI price feed from, was the Coinbase API. That can be manipulated. And I'm going to get into that in a little bit. But that's where Chainlink comes into play. Okay? Because what you want to do is you want to have a decentralized way of getting data. And what does that mean? Well, that means you don't get your data from just one place. Okay? You get the same data from multiple different places. And that's what's going to keep you from getting exploited. That's what's going to keep you from getting price manipulated. Okay? Now, the best way I can explain this is that some of these aren't exactly hacks as much as they are financial exploits. Okay? Financial exploits. So what does that mean? It's not a hack, but it's a financial exploit. Well, a hack is they literally a hack is they went and did something to the code or used the code in a way that it wasn't meant to be used. That's essentially what a hack is. But a financial exploit is where someone manipulates the numbers, right? And uses the time frame they have to execute certain transactions, right? And to take advantage of the lack of time and data. I know it kind of sounds crazy, right? So what you can do is you can manipulate the market by getting multi-millions of dollars of like USDT, selling it on one, crashing the price, arbitraging it, buying it from here, and then getting the difference. There's called a time-weighted average pricing. Okay, it sounds like a lot of information, and I sound so fucking crazy, when I talk about it, you know. It's called TWAP, time weighted average pricing, right? And that's the average price. There's the blocks, each block, and there's a spot price, the TWAP price. These are different. So these things can be manipulated, and I could go into much detail later. Time weighted average pricing, but certainly some of these hacks are just financial exploit through flash loans. A lot of these hacks have to do flash loans, and I won't go into detail because it just sounds so complicated to try to explain. But that's the common one is you need Chainlink. You need Chainlink to have a decentralized price oracle, okay? So that you get multiple data from different sources in a decentralized way. That's what's going to keep a lot of projects from getting hacked. Okay. Sounds so crazy. I know. Okay. Now, how to profit from a hack? Well, you got to look into the mind of a hacker. You got to, you know what I'm saying? You just came up multi-millions of dollars on different currencies. But what you not going to realize is that you're not going to walk away with the whole bag, right? Everybody's eyes is watching you now, right? Exchanges are watching you, different decentralized protocols, different just anonymous white hackers. Everybody's watching you because it's an open public ledger. And everything's traceable on the blockchain. It's just no one actually knows who you are just yet, right? And this is where you got white hat hackers tracking IP addresses. Like, it's kind of hard to get away with the hack, but a lot of times these people do. A lot of these times these people walk away with a pretty nice bag, all right? So how can you profit from a hack? Well, the best way, you don't know exactly, you don't want to promote a hack, you don't know when it's going to get hacked, but there's different liquidity pools that you can profit from because Uniswap charges a 0.3% fee to everybody that provides liquidity to that pool. Now, the only way a hacker can move multi-millions of dollars without giving up KYC or ID is through decentralized exchanges such as SushiSwap, Uniswap, 1inch. You can't stop a transaction from going through, and so this is the way hackers are going to cash out. And if you supply a liquidity to a pool, say a hacker got a bunch of, let's say, Badger DAO, right? And he wants to cash that Badger DAO to ETH, right? He's got like 25 million. He's like, all right, how am I get out? How am I gonna get this bread? Like, all right, I don't want Badger, I want that ETH because I can take that ETH to get USD. So the only way he can do that is go through the Badger DAO ETH pair on Uniswap, and he'll big transactions, right? He's trying to get it. Well, you as the liquidity provider, you profit from that. Indirectly, you profit from that. So there's been people got some really nice money off hackers trying to cash out their bread. Okay? So that's one way, is that by being in the right liquidity pools. Okay? You don't know which one, and you don't want that type of, but you can profit off a hack by being on decentralized exchanges, automated market makers, and providing liquidity to certain pools. Okay. Also, you have to understand the severity of the hack. You have to understand a bit more of what the hack is about. Sometimes it's not the hack. It's not the protocol directly. Sometimes it's not even the smart contract. Sometimes it's other things around the protocol that have gotten exploited. Right. So what I'm saying is that once you realize the severity of the issue, you're going to realize nothing's actually wrong, or it can be easily fixed, or it has been easily fixed. Like, you want to understand how well the protocol responds to the exploit, responds to it, because that's some of the best way you're going to know whether you should stay invested or not. How well are they taking care of this? Are they compensating? Are they keeping up to date? Are they trying to hide what's going on? Like, you want to understand how well they're going to handle an exploit and how well they have handled exploits. And that'll keep you aware of whether you should stay invested or whether you should stay away from some of these protocols. Now, what happens off of a hack is that a lot of people get scared. There's a lot of FOMO, and then the price just starts crashing, right? Like, same thing with Harvest Finance. So after Wi-Fi, as soon as, like, you're going to see people just lose their trust.